Okay, this is one more of my trades that I took this week that I just wanted to go over real quick. This was not a huge trade, but it worked out pretty well for me. I was pretty happy with it. I had some pretty good luck with these Canadian pairs this week. This is the pound CAD, the British pound and the Canadian dollar, and this is typically what I do here. Is I look at I use the daily and the 4 hour. I look at the daily first to see where my RSI, my RSI moving average. This is what they call the Fozzy. I scan the charts to see where I find this RSI moving average at an extreme position. I like to see it at the extreme for the best trades. This, I was a little bit skeptical about this trade because this is really just ranging. It's going sideways basically, so it's not trending the way I would prefer to see it, but it does have some pretty huge swings on these in this range, so you can squeeze some pips out of it. You see here on the weekly, it's really going sideways here. It's been a pretty huge downtrend for a long time, but we have stalled out and it's just really trending or moving sideways in this huge consolidation pattern. But if you look at the daily, you can play this, it's oscillating, so you can really play those swings pretty well and squeeze out a couple hundred pips on each trade. And let me see, where I got into this trade was, my entry on this one was pretty good. Let me mark this on the daily so it can be seen. I'm marking it right after the cross of the Fozzy down here. So you see the red line. This is the red line is the moving average of the RSI. The blue line is the RSI. I'm seeing that it crosses right here, and you see this big bullish candle right here. And we're going to zoom in a little bit closer and look at the 4 hour chart and see where that red line takes us. And there's the cross right there. I'm waiting for the break. These are the Donchian channels. I'm waiting for the break of the Donchian channel, so I know that the Fozzy has crossed at this point, and I'm just waiting for a break of the channels here indicated by this gray line. And notice one thing that I look for when I do this is I want to see that the trend has taken a change in direction. What I'm looking for are higher highs and higher lows. So I want to see these highs taken out, and I want to see it start to make higher lows as well. I mean, if I'm going long, that is. It would be the reverse if you're going short. You want to see lower highs and lower lows. So what we're looking at here, as you can see, this is kind of taking a turn around 154, round number 154, and it starts to make, there's a higher low right there. It takes out this top and moves a little higher, comes back, makes a higher low right here, and when it pushed up to this high, notice that it formed another high, or it's being traced here by the Donchian channel. So when it makes these higher highs, these are going to be the points where you're going to place your entry in this Donchian breakout. This is where I place my entries. You see in this green line here, this was my initial entry into this trade. This green line is right about 156.68. So my first initial entry, my first two lots are going in, or they did go in, at 156.68. That is this green line. My initial stop is going to be whatever the ATR is. Here it's 87. I use about 1.5 to 2 times the ATR. This is a pretty large ATR at 87, so I'm probably going to use about 1.5 times that, or somewhere around 150 pips. Or I just use some logic when I do this. If the lower low or support resistance point, I'll use that as long as it falls somewhere within that range. As you can see here, this is about 130 pips right here. So that's a great stop placement for me right there. So stop was placed right below the lows. It falls in line with my 1.5 to 2 times the ATR that I use. And so that's where my initial stop placement would be, right below this low here. And that's also below the round numbers. I use the round numbers quite a bit when I'm doing this. Round number is kind of a natural support resistance point. And that's it. I put in buy stops and sell stops almost exclusively I rarely do a trade anymore, just a manual trade. And what I've been doing is typically been getting stopped out. I just move the stop up and kind of let the trade develop on its own. I'm scaling into all of these. As the trade progresses, I'm loading up the trade. So I add 2 lots every time the trade advances in my favor. So what I did here was, as the trade advanced, as it moved up, I'm long the trade. As it moves up, every ATR, I'm going to add another unit, which is 2 lots for me. So as you see here, it moved up about 86 pips. I put in a buy stop order at this point. I move my stop back to the original entry point, and the original entry point, I move that stop up to break even. So basically what I have, I try to minimize my risk to 1 unit or 1% of the account. But when you do this, when you scale in, what's going to happen is you're going to actually have, you're going to extend the amount of time that you're assuming that risk. That's the downside. That's the con of scaling in. And when the trade works out for you, it really works out huge, because you're going to have the maximum number of lots working in your favor. But you can limit your losses just fine. You don't have to assume more risk, but what you wind up doing is extending the amount of time that you're assuming that risk. So you want to make sure you're really vigilant with your trades and you have good entries, so that you give yourself the opportunity to get into a maximum amount of lots, whatever. For me, it's going to be 6 lots. That's what I have determined is good for my account size. If you can get to the point where you've put on, and in 6 lots I do 2 lots per trade, so if you get to the point where you have all 3 units or 6 lots on and you've scaled in and the trade continues to move, you're really going to make some good pips. You're going to make a lot of money using this type of system. What I've tried to do here is just minimize the loss by scaling in and maximize the profit by being able to have the maximum number of lots working for you. This one didn't quite go all the way. As you can see, this red line here is where my stop was. I had moved my stop up, and I wasn't, what really held me back here was this over here. You see, we've got kind of a pivot zone here, and I was a little bit concerned when this candle formed. And I was concerned that it may not push its way up above this round number, the round number of 159, and I was a little bit concerned that it would be falling back. So I didn't load this up with another lot. I didn't feel like I had, I didn't feel like I had the room. If you look on the daily here, you'll see you've got some of these big points popping up here, and I just didn't feel good about loading this up with another unit. And so what I did was I just went ahead and kept the 2 units on there, or the 4 lots. I moved my stop up to here. This stop is at, what is this at? This is at 158.50. I left my stop there, and sure enough, it came back about 100 pips. This one stopped me out, but I wound up making on the first entry, let's see, that's about 180 pips on the first entry, and on the second, that's about 90 pips on the second. So a total with both lots about 200 and about 350, so about 500 and some odd pips altogether on this one trade. So as you can see, this the channel breakout works quite well. Scaling in works quite well. The only thing that you have to be careful of is make sure that you give yourself this room for the trade to move in your favor. If you're going to scale in, you really have to clear this area in order for it to work well for you. Maybe using the ATR stop of 87, maybe that's a little too tight. Maybe it needs to be 2 times the ATR, because one thing that I've noticed is if perhaps you use the midline of the Donchian channel as your stop point. I know some traders even use the opposite line to set their stops, which seems pretty excessive to me. I don't know if I want to take 200 or 300 pip loss, but some guys do that. But sometimes I think that maybe this midline might not be a bad place for your stop. had I done that, it looks like this really wants to push higher. We had a big bearish candle at the end of the day on Friday, but this looks like it may go a little bit higher. Anyway, it's worth keeping an eye on. I think that probably if it does go higher, you definitely have a lot of room to the upside. Once it clears 160, you've got yourself almost 400 pips in the clear. So you could definitely still make this a decent trade by re-entering it and just being careful, moving your stops up and limiting your risk like that. So anyway, that's my my British pound Canadian dollar trade.